Hi diddly ho there, this is Cameron with Emerson Property Management. Every week I bring you tools, tactics, strategies, lessons I've learned, things that have helped me build up a sizable rent portfolio in about 2 years, and now manage that portfolio. Today guys, I'm rocking the stash. Let me know if you like it below. Little different look here, getting a little ahead of Movember. Today guys, I want to talk about Airbnb, high value rentals, people, if you're making, a couple $100,000 a year, or maybe making $150,000 a year, and how real estate fits into your overall wealth strategy. So I've had several people, friends included, who have said, Cameron, why would I buy a rental property, single family rental that pays me $150 a month? Why? That I make $10,000, $20,000 a month. Why do I care about a little piddly rental property that makes $150 a month? It's too much effort, too much time. I really don't want to mess with it. The juice is not worth the squeeze. So that's one thing I hear. The second thing I've heard very recently over the past couple of years, especially with COVID, time of this recording, we're in 2022, it's September 2022, but oh my gosh, Airbnb, I'm making $1,000, $2,000, $3,000 a month off one Airbnb property. Would you manage my Airbnb? Are you going to get into Airbnb? Are you going to buy Airbnb? So I'm going to kind of tackle both of these at the same time. So first one, I am not going to get into Airbnb from a management perspective. I think that it's a different business model. I think that if you guys have property managers that you're working with currently and they do short-term as well as long-term rental management, you need to seriously evaluate that unless they have a totally separate division, because it is totally different. It is a different beast. It's apples and oranges. It's not the same. You have a hospitality business and you have a long-term rental business. They are different businesses. A lot higher turnover. I can go on and on and on and on what the difference is, but there are two totally different businesses. So be cognizant of that. The second thing, I am not interested currently in buying an Airbnb. Why? Because one, I am laser focused on becoming the best property manager there is and delivering great service to our current owners. So I've kind of slowed down the growth of my portfolio to focus on managing the portfolio better. My portfolio is included. So I want to deliver the best service and the best management to this current owner group and property group that we have. So I've stopped buying as much. Now, even if I was buying, I wouldn't buy Airbnbs. Why, Cameron? Because Airbnbs, again, like I said earlier, are different. I am very good, not to toot my own horn, but I know what I'm doing in the single family world. I know exactly what to look for. I'm very good at analyzing the property. We're good at managing the property. I understand how it works. It makes sense to me. Airbnb is a little bit of, I don't even know the right word to say for it, but it's a different beast, okay? Values have run up on Airbnb. The way you calculate the return on Airbnb, you can run them into the ground and you can increase the cash flow unbelievably. Reviews really count. So it's just a totally different model that I don't feel comfortable getting in, right? That's just not my game. And if you guys, I teach this all the time when I'm speaking and whatnot, you buy a couple single family rentals and I'm going to go buy and syndicate a 150 unit apartment building. No, you're not. You don't know what the hell you're doing. Now, if you jump in the hip pocket of a mentor or somebody who has done 30, 40, 50 syndications for 150 unit apartment buildings and above, yes, you know what you're doing. But to go from one or two single family houses to 100, 200, 400, 1,000 unit buildings and syndications, it's different. It's not the same. It's a different skill set. So I stay in my lane, sometimes to my own demise. I've turned down, I don't know how many calls to manage Airbnbs. I turned down, I don't know how many investment opportunities in Airbnbs, but I'm not going to do it. I don't want to do it. I want to stay in my lane. Now, there might be somebody watching this who I've talked to extensively about why it was a fantastic decision. One current owner and one very good friend of mine who it made perfect sense for them to go into Airbnb. Now, Cameron, you just said you don't like Airbnb. You would never buy it, or not, at least not right now, for the foreseeable future. Why would you tell somebody, or why does it make sense for somebody to invest in Airbnb? Very good question. This is not hypocritical either. This is a perfect fit for purpose thing. So when somebody asks a question of what should I invest in, what should I do, you have to understand their whole financial picture. So these two individuals I can think of right off the top of my head both make several $100,000s a year. One of them had not bought into single family, and they were trying to buy into single family in 2021. So you guys can imagine, uber competitive, prices are flying, going up through the roof. It was just too crazy for them to get in and make any money. And they were talking about breaking even or making $100 a month. So that individual bought into an Airbnb, and they put down a lot of money, but that property has the potential to make $30,000, $40,000, $50,000 a year. Now, for somebody that's making a couple $100,000 a year, $3,000 to $5,000 a month, now that starts to make sense instead of $300 to $500 a month. So the juice is worth the squeeze. And they have the financial ability and the financial cushion, dual income household, to be able to ride out any storms and screw ups, okay? You hear all these gurus talk about go out and go out and put it on your credit card and just get a house done, do it. You don't need no job, no money, no credit. How freaking stupid is that? Because if anything goes wrong and you have no money, no credit, no resources, you are screwed and nothing ever goes according to plan. So that is why it made sense for this person to do this. And the other individual already had a single family portfolio. So they had a handful. And the other individual had a portfolio of 5 to 10 properties. And it made sense for them because they had seen a huge run up in value. So again, this person has a fantastic income and they have this rental portfolio and they've seen this huge equity growth. So if you guys haven't seen the last week's video, it's up here or here, and that's talking about how we have that return on equity and you have this huge appreciation growth and what you need to do. So check that video out. But he had so much equity sitting in these properties that it didn't make sense for him to continue to make $200, $300, $400 a month off of all these properties. It made sense to take some of the equity from this one and put it into another business deal that he had. So taking this 3 to 5, 6% return, pull that $100,000 out and put it into a 10, 20, 30% return. It made the most sense to do that. So those are two scenarios and he bought an Airbnb. And again, he has the financial means, he has the capital, he has the cushion, he has the credit, he has the resources. Both of them do. And I just think that we hear a lot about Airbnb and how it's awesome, but I do not advise it. And I think there are instances, however, there are instances where it does make sense to do. If you guys make several $100,000s a year and you do not want to have a 30 or 40 or 50 unit portfolio or a single family rental portfolio, it makes the most sense to go out and syndicate into deals, put 50, 100 grand into several syndications where they're doing 100, 200, 300 unit apartment buildings. Buy a self-storage place, put it in passively where your juice is worth the squeeze. Or if you've got a lot of equity built up in some of your houses, on some of your single family, maybe it is time to transition that into something else that makes a little bit more money. But again, I love single family. I love it, I love it, I love it. It's how I built most of my wealth has been in single family. And I think it's a fantastic way for the average person to become a millionaire and achieve whatever sort of financial freedom they want. 10 to 20 houses is not impossible for most people. And especially if you're doing that over a 10 or 20 year lifespan. So if you guys start working at 20, 25, you're talking about being financially free in your 30s or in your 40s. Way earlier than the traditional retirement at 55 to 65, somewhere in there. So I hope that was helpful. Don't misconstrue the message. Airbnb has a fit for purpose. I don't like it particularly. I think there's a lot of things changing with it. I think people are still trying to figure it out. There's a lot of money moving that way. So I think it's going to drive returns down. But I do think it makes sense for some people. So I think for most of you watching this video and most of our owners and most folks, it's going to make the most sense to build a portfolio of 5 to 10 or 10 to 20 single family rentals. But for some folks, I'd rather have 2 or 3 properties, as an Airbnb. For some of you, it'd been to make more sense to have 2 or 3 properties at Airbnb that are both bringing you in, or each property is bringing in $3,000 to $5,000 a month. There's your 20 grand a year or 20 grand a month with just 3 or 4 houses instead of 30 or 40 single families. So begin with the end in mind. I always say that to folks, begin with the end in mind. What are you trying to do? Do you want to build a big business, or you just want the cash flow? What kind of involvement do you want? Some people like this stuff. So I hope that was helpful. If it was, let me know. If it wasn't, let me know. Go on, beat up on me, all the Airbnb folks. And I'll see y'all next week. Appreciate you.